These again are very small companies. Some of these are not just small caps, but they're micro caps.
Tiny stocks that still have tremendous growth potential for investors.
The stock's up about 97.5% for the year.
While it may be a more volatile ride, MarketBeat's Chris Markoch shares a list of 4 penny stocks that are getting some real attention right now.
7 analysts that cover it. That's a lot. There's just a compelling story there that's causing analysts to want to pay attention to this company.
It's a list of little-known names that may be worth your attention too. Let's dive in. Chris, so great to have you back on the show. This time talking about some growth opportunities for investors, specifically in the small caps and even the penny stock sector a little bit. If you're new here, hit that subscribe button. We'd love to have you follow along with all of our daily stock market news coverage. Before we dive into your list of 4 penny stocks that have tremendous growth potential ahead, let's just talk about what investors should know about these kind of small cap, low cost investments.
A lot of investors are attracted to penny stocks because they can put a fairly nominal investment in there. They can buy a significant amount of shares. And if the price goes up even a little bit, they've made a profit. A lot of investors aren't necessarily looking at these as being long-term opportunities. That doesn't mean that you're day trading them. It just means you're not necessarily looking to hold these stocks for 6 months or a year or even a whole quarter, but you're looking and trying to seize an opportunity while it's there, and that's what can happen.
Sometimes they really can be quite the opportunity, and that's getting in on a really explosive growth story right at the early stages, but that's not always the case. So let's talk about some of the risk investors should be ready for in this area of investing.
Right. Well, one of the risks, especially at this time, is the fact that these again are very small companies. Some of these are not just small caps, but they're micro caps. Their market caps are in the maybe $100 million range, not necessarily in the even $1 billion range that would still be considered a small cap. So these are tiny companies. Some of them are not profitable. Some of them have very little revenue. And then the larger risk is if you're chasing the stock at the wrong time, sometimes it just maxes out at that level and it has to come down a little bit. So there's risk involved with penny stocks. But again, the reward can be there as well. And one of the things I used for the stocks in my article was I looked at penny stocks that had some analyst coverage and some favorable ratings from analysts, because that tends to be a little bit more of a better predictor of if the long-term narrative for these stocks is solid.
Yeah, a lot of the stocks we talk about on this channel, those bigger tech names, the companies everyone's talking about, they have multiple analyst ratings. We can always talk about that. But for a penny stock to even get analyst coverage says that there's something to pay attention to here, right?
Yeah, I mean, a lot of times analysts, they're not going to spend a lot of time with penny stock companies. Kind of the juice isn't worth the squeeze. So when you see a company that has 2, 3, even 4 analysts covering it, that doesn't sound like a lot, but for some of these companies, it's a lot. And that suggests that either A, they have some pretty significant institutional ownership, or B, there's just a compelling story there that's causing analysts to want to pay attention to this company.
Well, let's dive right into those stories right now with your list of 4 penny stocks with real growth potential right now. What's the first company on your list?
Okay, so the first company is one that maybe some of our listeners and viewers have heard about, and that's Microvast. Now, the ticker symbol here is MVST, and it does trade on the NASDAQ. I don't think any of the stocks we're talking about today are over-the-counter stocks, so that's good. It's trading on a major exchange. So this is a company that is a leader in battery technologies for electric vehicles. It hasn't been easy being a green energy company in the United States in 2025, but there's where the story for Microvast gets interesting. Microvast doesn't rely, at least right now, on the United States for a significant portion of their revenue. They're getting that from, right now, they're getting it from international markets. So that's where the story is interesting. The stock went up sharply after its last earnings report, where it beat on the top and bottom lines. It maintained its full year revenue guidance for revenue growth between 18% and 25%. And the company now seems to be solidly profitable, and it's even starting to generate some positive free cash flow. On the downside, skeptics will say, well, the company has some high short interest and that contributed to the stock's spike. But I would counter that by saying Microvast was recently added to the Russell 3000 index. And so that may increase institutional investment in Microvast stock, which currently is only around 20%.
I think that's an important point, that it's making another major list out there. So that gives some more validity to this company. Let's talk about the potential growth just with what this company does, the EV market. Like you said, it's not necessarily all just in the US, but what catalysts might there be in the EV market in their business in the future that would cause an investor to say, okay, this is an idea that could get some more money going towards this business in the future?
Not only is the company involved in battery technologies for EVs, but they're also involved in battery technology for energy storage. And we all know that's going to be a big area of interest for not only international markets, but also the US market when we're talking about our need for more power and how are we going to use this power? How are we going to store this power? And that's, I think, where Microvast has a compelling story, particularly since they have over 800 patents that have either been granted or are pending. So a lot of the company's technology is proprietary and it's protected, which is another thing that investors are going to want to look for.
A very interesting first pick. And if you are interested in more of the electric vehicle investing, make sure to check out our free premium report with almost everything you need to know about the EV market. You can scan the QR code or click the link in the description of this video to get that free report and learn much more about the entire EV market and how to invest in it with this free report. All right, Chris, let's move on to the second penny stock on your list.
Okay, so we have to have at least one AI stock in here, right? And so this is Ribbon Communications. The ticker symbol is RBBN. You might call it a picks and shovels play for the AI industry. What the company does is they provide the telecommunications infrastructure that large language models need in order to operate at scale. In other words, to get all these large language models to interact with each other the way agentic AI and all that is building out. Ribbon Communications, the technology that they use becomes foundational to any company's AI stack. Now, one of the reasons why Ribbon Communications appeal to me is that they get a lot of their growth from government contracts. Governments obviously are looking to build secure, reliable, scalable networks. Ribbon plays right into that. The stock's up about 20% since their last earnings report in April. And again, like we talked about with Microvast, the company maintained its full year guidance of revenue between 870 and 890 million. At the low end, that's about 4% higher than analysts forecast. And the company also announced a $50 million share repurchase program, which is not something that you necessarily associate with penny stocks.
Yeah, that's really interesting for a company of this size to be doing that much of a buyback program already. And especially, I would assume it's a very new company, Chris. And that's what I wanted to talk about, is the potential of risk in a sector that's very new and growing so quickly. There's many different AI companies out there. Does that make this one more risky, or maybe even just more potential for growth because there's so much growth in this industry?
Yeah, so you're right. This is a new company. It just went public in 2001. If investors are familiar with 2001, that was a time when a lot of these SPAC companies went online, a lot of these tech startups went online. And you can see in the chart that the stock shot up to $300 a share when it IPO'd, and it's shot down very significantly since then, obviously, if we're talking about being in the penny stock category. But here's what was intriguing to me about Ribbon is when you look at the analysts rating, it's got a consensus buy rating. It's covered by at least 4 analysts, and they're giving it a consensus price target of $5.88, which is 64% above its current price target.
All right, so we have AI for your second company. Let's dive into the third penny stock on your list.
Yeah, so we've hit battery technology for EVs. We've had AI. The next one's cybersecurity. The name is Intellicht. The ticker symbol is IDN. So cybersecurity We've talked about it a lot on this channel. It's one of the most investable themes for the next decade and beyond. And AI is only going to accelerate the need for cybersecurity because it's making the threats more sophisticated, and it also means that companies are just going to have cybersecurity to help combat those threats. So if you're looking in the penny stock or the very, very small cap space, Intellicht is one to consider. It compares in terms of what it provides similar to, and I say similar to because it's not identical, but similar to a company like Okta. And that's because Intellicht is focused on the identity verification and fraud detection niche. So it's trying to say, it's kind of getting into that area of the zero trust. How do we confirm that people who are on your network are supposed to be on your network? One of the interesting things about this company for investors to research is they have proprietary real-time technology that reads data directly from a driver's license without relying on larger databases. And so that may be a benefit to some companies that are concerned about privacy and other things. This is a software as a service company. So like a lot of cybersecurity companies, they rely on renewable revenue, annual contracts. This company has that. In their most recent earnings report, they said they had 100% renewal rates, which is outstanding, obviously. And their annual contract values are exceeding $10 million. And as with a lot of these SaaS companies, they have outstanding margins. In the case of Intellicht, it's 90% gross margins. That's probably why it's got the attention of analysts.
Very interesting. I think with these smaller companies, it's interesting that you said Okta, also a small company, but one a lot of investors have heard of. It's made headlines. This company has some very satisfied customers with 100% renewal rates, but not the explosive growth or maybe the headline making business that some other cybersecurity firms are. This one intrigues me as, is there potential with so many satisfied customers for this to really take off? And what might that take? Is it just speculation thinking, okay, there's a lot of success here. Could there be even more success in the future?
Yeah, I think right now that's a great point, Bridget. So the stock's up about 97.5% for the year. That's an outstanding move higher. And right now it's trading at around, let me look here, it's trading around $5.61. And the consensus price target from analysts is around $5.83. So right now it's getting right to that point where investors might expect a little bit of a pullback. That's when I think investors might want to get in here on Intellicht. Analysts believe that it can go up to around $5.83. It's trading right about there. It's made a nice run up this year. It may be due for a little bit of a correction, but that should be a very viable entry point for investors.
All right, Chris, thank you for that pick. Let's move on to the last company on your list.
So the last stock on the list is Endeavor Silver. Again, if we're going with investable themes here, precious metal mining stocks are a place to be. Again, you can go with some of the big boys, and we've talked about them on this channel. This is a smaller company. It's primarily focused in gold and silver mining. Silver is expected to possibly outrun gold in terms of performance for this year. That's one of the reasons why I think investors should be considering the stock. It owns mineral properties in both Chile and the United States. Let's see here. Analysts love the stock. They have a price target of $6.93 on the stock. That's a 43.9% increase from its current price, which is around $4.60. It's got about 7 analysts right now, according to MarketBeat, 7 analysts that cover it. That's a lot for a company of Endeavor Silver size, because this is a $1.35 billion company, so it's firmly a small cap company, and it's got a lot of analyst coverage, and they're bullish on the stock. This is one that I think, if investors are looking to play the precious metals angle, but they don't necessarily want to own silver, this is a great area to look at. It's a mining company that, again, as that price of silver goes up, it becomes much more profitable for these mining companies to try to explore and extract more silver.
A very interesting one. And I think maybe the reason it's getting so much analyst attention is because this field, like you said, is so hot right now. Silver has had such a big year. And I think there's a lot of expectation that it's going to continue to have a really strong year and maybe a strong few years. I think that's an obvious indicator that that's going to be a huge future catalyst for this company for more growth.
I completely agree with you, Bridget. I mean, right now, 2024 and into the early part of 2025, gold was the clear winner if you were in precious metals, and silver's been held back. Late last year, there was a lot of people looking at the sector and starting to say, that doesn't really make sense. The gap between the growth of gold and the gap of silver shouldn't be as wide as it was. And so a lot of people feel 2025 is the year when silver is going to close that gap. So Endeavor Silver would be one of the companies that you're going to watch for in that case.
All very interesting picks and a lot of companies investors may not have heard of before. If you're looking for more information on how to invest in penny stocks and how to find them using MarketBeat's free tools, check out a video we made all about penny stock investing on this channel too. Thanks again for joining us, everyone. Let us know what you think of these companies, or if you're interested in this kind of investing, which companies are you looking at right now too? Share it with everybody in the comments. We'd love to hear it. Thanks for watching, everyone, and as always, happy investing.